Welcome back, traders and investors, to Benzinga's pre-market prep, brought to you by marketfy. I'm your co-host Joel Alconin, along with Dennis Dick, and we have JC Parets on the line. He's a marketfy maven and founder of Eagle Bay Capital. JC, how you doing this morning?
I'm doing well. How's it going, guys?
Good, good. First, it's a lot of news about Greece, and I know you like to pay attention to your charts and your indicators and stuff. How much emphasis do you put on this Greek thing?
For me, guys, you know how it is. It's mostly noise. Every day there's headlines out of Greece. Some you can believe, some you can't. It's not for me. I got to worry about price. I mean, sure, I guess it's a good thing. So by definition, it's probably not a bad thing, but it's not anything I'm making any decisions off of.
It's a great point, JC. I couldn't agree with you more. This is just noise. It seems like every night we get some headline out of Greece, and the S&P futures drop 10 points, but then they rally back within a few hours, or they pop up 10 points, then it's just noise and creates chop more than anything. I don't really think the U.S. markets care that much.
There's a lot of people that's their business. It's their job to create noise. They have to write things and, justify certain price moves or whatever the case may be, and that's fine. But us as market participants, we can't worry about any of that stuff. We got to worry about what matters, and that's price. Our job is to make money in the market, not to create noise. Our job is to filter through all the noise.
JC, let's go next before we go into some individual issues here. You were kind of on fire last week. I'm surprised you're still working this week. The TLT, you were a little worried about the price in that and the bond market, and holy macro, look at that thing. Have you been able to benefit from that call? And if so, what are you looking for next?
We've just stayed away from it. Like I told you guys last week, you asked me about rates, you asked me about TLTs. Treasury bonds hit our targets. I mean, I've been the biggest bond bull, out there for the last year and change. Loved them. But once your targets are hit, you got to be disciplined. So I wasn't necessarily shorting bonds. I guess in hindsight, I probably should have been. I just figured stay away from it, and I still think you stay away from it. I mean, that trade got crowded. I mean, the time to be in that was not now. You wanted to be in that trade last year, or even maybe even coming into the new year. But that's not for me. There's so many better places to be. I'll leave. That looks like a chop fest to me. A lot of headaches in that trade right now. I don't need that stuff.
Okay.
Utilities were really getting whacked here. I noticed just the other day, if we were looking at the XLU or even the individual stocks, some like DTE Energy, they knocked off 5 points from DTE there just 4 trading sessions ago. And actually, they started breaking down a little bit again there yesterday. So some of these crowded dividend plays are starting to unwind a bit.
Yeah, I couldn't agree more. In fact, one of the reasons why I started suggesting that rates were probably heading higher over the near term and get out of the bond trade, that was, to your point, one of the reasons. We started seeing some bearish momentum divergences in the utilities and, like you said, some of the other higher yielding, securities and things of that nature, not to mention what we're seeing in rates and, obviously, trade what you see, not what you think. Treasury bonds had hit our targets, some bearish momentum divergences there as well. So, the weight of the evidence was suggesting just get out of the way. So we did, and I still don't see any reason to get in. I don't think it's a short. I think it's a tough short if you're trying to short TLTs, but I wouldn't buy it either. I just stay away.
Yeah, sit on hands. We talk about that. You brought up an interesting point here about the TLT, and you talked about target. Your target was hit, so you exited the trade, didn't necessarily take a reversal off it. But how do you find a target in Apple? I know you were bullish that if that broke out to new all-time highs, trading up again, shining bright after the first solar deal here. How do you come up with your – I mean, I know you're longer term with some of your positions in the trading than, Dennis has long-term targets as well, and we do have stuff in our portfolio. But how do you find a target in a stock like Apple?
Well, in Apple, it's actually pretty easy because both time frames, I look at daily and weekly time frames, and they both suggest that 129 is the target. So, I came into the week saying, hey, listen, Apple breaks above the highs from late last year from the fourth quarter, which was around 119 and change, just under 120, and you got to buy that breakout. The target is 129 and change for multiple reasons. The 161.8% Fibonacci extension from the November to January correction is 129 and change. And if you look bigger picture at the correction from the 2012 highs all the way down to the lows in the spring of 2013, the 161 extension of that correction is also 129. So when you have a cluster of Fibonacci extensions at the same price, it just screams to fade that price. I mean, could it go higher after that? Absolutely. But from a risk-reward standpoint, when you make those calculations and say, okay, I'm going to buy it only above the November highs and not below it, that's where you calculate your risk, and then you calculate your target based on this. And if the risk versus reward meets your standards, your particular objectives and risk tolerance, then you put a trade on. If you can't calculate both the risk and the potential reward, there's no way you can decide whether it's for you or not. So that's how I approach this market. The risk reward very much in favor of the bulls coming into the week. And I think we're headed to 129, and we'll be fading it up there.
Will you, like, if to protect the long position or whatever, will you move a stop up, or will you just have a mental stop in mind? Do you do any kind of protection on the downside?
Yeah, we only want to own it above the November highs.
Oh, okay. All right.
That's simple.
All right. Another sector that you were looking at for a potential breakout was the semiconductor index. And I'm looking at the stocks here, bumping up near some former highs. You also mentioned Micron. Could you give us a breakdown on Micron technology, please?
Yeah, I love semis. I mean, as you guys know, semis have been an absolute monster over the last couple of years, no doubt about it. And, you've kind of lost a little luster because they've been doing nothing for a couple of months. And, that's not necessarily a bad thing. When you see these consolidations and, when you look at the Philly Semiconductor, the stocks, if you will, you could see this consolidation since November. It looks very similar to the NASDAQ 100, looks very similar to the transports. Semis and industrials maybe look a little bit different, but very similar in terms of this multi-month consolidation. I think it's a healthy thing. We came into the week very bullish semis, and sure enough, that Micron a couple of days ago was up 10%. Love that. And, just from, we took the profits. I mean, I think it's headed higher, and I want to own it above that 200-day. But when you see prices trying to break down, okay, and you're already below what is an upward sloping 200-day moving average, there's a lot of momentum to the upside that suggests that a break to the downside is very, very difficult. So I would take that trade 10 times out of 10 where you have people trying to short a breakdown, and the prices are below upward sloping moving averages. So that slingshot effect should be expected. So the fact that a couple of days ago we got a 10% move in Micron, I mean, that is exactly why we look for those sort of mean reversions where prices are below upward sloping smoothing mechanisms.
So, JC, we had the nice up move here in Micron. Is there any other stocks in that sector that have not went yet that you're eyeing up?
I like it as a group. I think that for investors out there, you could look at like SMH, for example, which is the semiconductor ETF, and then look at the holdings. And you kind of, a lot of them look similar, but, you can look at the individual holdings and make a decision for yourself based on, your particular objectives. I happen to like Micron coming into the week for the reasons that I just suggested, but I think the group, and if you just want to keep it simple, stupid, and just own the ETF and own them all, by all means, I don't think that's necessarily a bad thing. Obviously the smaller names are going to have, probably more beta than some of the bigger ones. Perhaps an Intel might not move as much as a Micron, for example, or a Broadcom. So it just really depends on who you are. For my purposes, Broadcom looks great. It's one of the strongest ones out there. I guess is it doing anything pre-market? It's not really doing anything pre-market, but this thing's a monster. I think this Micron heads back to, the highs from a few years ago, up towards 47, 48. We got some room. We got another, close to 10%, 8 to 10%.
I got to ask you about the Tesla report here. We're obviously seeing a pretty decent sell-off here in TSLA. A lot of traders trading it. It's already traded at 377,000 shares here this morning. Do you follow Tesla at all? And what did you think of the report?
Yeah, no, I follow them all. I mean, I have no idea what they reported. It's not really...
yeah, you don't care about the earnings, but you care about the technicals. And what are the technicals telling you on Tesla?
Yeah, the technicals are telling me that there's no reason to be in this trade. I mean, you got a flat 200-day moving average. I mean, that has headache written all over it. Anybody in this, deserves to lose money, I think. When you have these flat 200-day moving averages, you're going to get whipped around. I mean, there's no reason to be involved in something like that. I could have totally seen this today trading up at 230, 240. I see it down in the 190s. I mean, it could have gone either way. You're flipping a coin. We're not in this market to gamble. We're in this market to, manage risk and, look for risk rewards that are skewed in our favor, and taking a bet going into earnings with a flat 200-day like this. I mean, you're just asking for trouble. So, yeah, that's not for me. And, this has money loser written all over it. Either way, long or short.
Yeah.
So things like that, I got to stay away from that stuff. You guys asked me last week. Speaking of which, you guys asked me last week about Twitter. We were going into their earnings on that particular day. I said the same thing. Not for me going into an event like this, but I got to tell you, the way that it broke out. We're holding on to that former support. If you remember from the fourth quarter last year when we broke down in late October. We're right at that level. So if we start to take out, $48 a share, I think we could be off to the races heading back to the mid-50s. So that actually now that the catalyst is over, prices gapped up to a key level and have consolidated and held those gains. Now, from a risk-reward standpoint, we now have a pivot. Now it makes sense to participate. You get the catalyst out of the way. You let all the media worry about Greece and Tesla. And now that they shut up about Twitter already, now we can start getting involved in that particular name.
I noticed 3 days of very similar ranges here after hitting 48.50 on earnings day. Three highs between 47.39 and 78, and some lows. And the lows aren't quite as tight here, but keeping an eye, 48.50 has been the high of the move. Before we let you go, JC, a couple other stocks in the news. Not sure if you follow them. Cloud security space, FireEye's taken off. Is that something you follow at all, or have any other stocks in the sector?
I got to tell you, I would say that the only reason I follow this is because I get asked about it constantly. I don't know what the obsession is over this name. The stock has done nothing since May. It just trades sideways in a choppy range. I see nothing to like about it. I have no idea what they do. And I got to tell you, the only reason that I know that the stock even exists is because people are always asking me about it. And I give the same answer. I mean, this is a gross chop fest. I mean, I see no reason to buy this. I see no reason to short it. I guess it's up a little bit pre-market. If I had to guess, I'd probably fade it. You're above a downward sloping 200-day moving average with a lack of trend, momentum against you. I see nothing to like about this on the long side. If anything, I guess I'd probably rather be short, but I wouldn't force that. I wouldn't force that short now.
Okay.
I would totally stay away from this. This has headache written all over it.
JC Parets, marketfy maven and founder of Eagle Bay Capital, sticking with his rules, and way to go there, JC. It's the way that we like to talk to our traders and investors about sticking to your guns. Have a great trading day, great weekend, and we'll speak to you next week.
All right, guys. Looking forward to it.